Hi, everybody. I've been asked a series of questions following webinars and interviews that I've done. So I thought I'd record this video and explain what's going on with the Clifford Protocol, why it works and how it works, and also answer all of these questions that come in on a very regular basis. There's a huge amount of interest in it for obvious reasons. So let's dive into it. First of all, before we start, let's just give you, I will give you an overview of exactly what the Clifford Protocol is. We have a scenario where the entire game of commerce that we're all playing, what I describe as the monopoly board of commerce, is operating in an artificial realm. Everything on the monopoly board is artificial. We, the living men and women, we provide our energy through an agency where we are the agency for the birth certificate construct, the player piece that sits on the monopoly board and goes round and round the board. That's what many people refer to as the person or the citizen. It is an artificial construct. It was created following the registration of a birth certificate. Critically important are two things. One is that it is a banker. If you look at the Bills of Exchange Act of 1882, it tells you in there that a body of persons is a banker. Well, an artificial construct person, therefore, is a banker. And that's critically important because when the signature is applied to any contract with a clearing bank, the bank is operating as the nominee for the signature credit energy, which transfers from the living man, woman onto the monopoly board of commerce through the signature and, of course, critically important, through the citizen or the person that is a banker as confirmed by the Bills of Exchange Act 1882. Now, in the next thing, which is very important to comprehend, is that the entire monopoly board from 1933 onwards is operating in Chapter 11 bankruptcy, as you can confirm by looking up the reference House Joint Resolution 192. And you'll see that the entire board is operating in bankruptcy with the United States Treasury as the bankruptcy trustee. So everything on this artificial monopoly board is operating in bankruptcy. All the entities, all the constructs on the monopoly board are effectively bankrupt and they are all debtors. The energy that runs the board is human energy. In 1933, a mortgage was taken out over all of the assets and all of the energy of the people that is going to now operate this great big worldwide monopoly board of commerce. The reserve currency of the world is the United States dollar. So just about everything is balanced back to the United States dollar. And it is a dollar-based system that everybody is operating in. Now, the way that the energy transfers onto the monopoly board is a stroke of genius by those who created the system. The bankers at Jekyll Island in 1913, who created the Federal Reserve Act or created the Federal Reserve process. They were genius in what they did, because what we now have is the illusion of wealth. People who are playing Monopoly without realizing it. The agent, the living man, woman, is the player. The player piece is the citizen, this artificial construct of the birth certificate. That is what's playing on the monopoly board, but it's all debt. Everything on the monopoly board is debt-based. If you look at the entire world debt and look at the world debt clock, for example, that always is going up and up and up. It's never ever going to come down. The reason why is because everything that goes onto the monopoly board creates debt, and that is based and backed predominantly by human energy. So what we have is that we have a monopoly board, artificial, which is being financed by human energy. It is, in fact, a modern slavery system. But there is an illusion. The players believe that they own things on the monopoly board. They believe that they own their car, their house, their business. They believe that they've got money in bank accounts. They believe that they've got money in pensions, in investments, even cryptocurrency. And that's because it looks like there is substance behind money. But of course, there is no substance at all. And all of the assets have been mortgaged, and therefore the legal title to the assets belongs to those that run the monopoly board. So there's a great illusion. There are two titles on all assets that are on the monopoly board. There is the legal title, which has been taken by those that run the monopoly board. That's the real ownership. And then there's the equitable title, which is what we all get. So if you look at your motor vehicle, you're basically renting it, even though you believe that you own it. You don't really own it. You have an equitable title. You get to use it on the monopoly board. The same with the house, the same with the business, the same with any property. You get to use it with the equitable title, but you don't actually ever own it, because the real ownership of it, the legal title, has been used as collateral for the mortgage that runs, is the collateral for the running of the entire monopoly board. So everything on this monopoly board is artificial. It's all debt-based. There is no substance to money. In 1933, gold was taken away and it was replaced with fiat currency, or the Federal Reserve brought in the dollar, brought in the dollars as fiat currency, and that basically is what is being used on the Monopoly Board of Commerce. Now, when you look at what is the dollar, what is any currency, it is basically just a promise to pay in the future. If you get a banknote out, whatever the currency denomination is, it will tell you that it is a promise to pay in the future. I promise to pay the bearer. You can't pay anything on this monopoly board. You can only discharge. So one debt, an existing debt, is discharged with another debt. So every time you make a transaction, what you're really doing is making a deposit into a bank. So when you open a bank account and you want to make bank payments, you make a payment, or it looks like you're making a payment. But in reality, what you are doing is you're making a deposit in the other account. So the account that you are, in inverted commas, paying. You can't pay, there's no money of substance. There is only promises to pay in the future. When you sign up for a mortgage, a credit card, or a loan, the signature creates the credit. That signature deposits your energy onto the monopoly board through the artificial construct of the person, this banker, as confirmed in the Bills of Exchange Act 1882. So that's what's going on. The monopoly board, to summarize, is an artificial board. Everything on that board is artificial. The person, the citizen, the artificial construct of the birth certificate is artificial. All the other player pieces on the monopoly board are artificial. Everything on the monopoly board is based on debt. And to finance the debt, they took out a mortgage over all the assets. Those that run the monopoly board own the legal title. Everybody else gets equitable title for the assets that they believe that they actually own. They don't own anything. They just have the use of the things on the monopoly board. There shouldn't really be any world poverty, because all of the currency that is running around the monopoly board is created what's called ex nihilo. So that's basically the energy of the living men and women is transferred onto the board. And when they make a deposit, when a living man, woman, through the signature, using the artificial construct of the person, signs up for something, makes a bank payment, signs to get a mortgage, signs to get a credit card, signs to get a loan, that is a deposit of energy. The banks are operating as nominees, which basically means fiduciaries or trustees for the living men and women who have transferred their energy onto the board. The living men and women are the originators. They are the owners of that energy. The entire monopoly board world debt is owed back to the living men and women. When governments raise finances, they're not really using taxes to finance anything at all. What they're doing is they are using signature credit. They're using the energy of the people to create currency ex nihilo, out of nothing. This is what is meant by quantitative easing. Now, the executive summary, what it's saying about here is that you've got this 1099 OID construct. Now, what that means is that every time a deposit is made, this energy deposit onto the monopoly board, there is an original issue discount that is connected to that deposit. So when you make the deposit, when you make a signature, when you instigate a signature, make a bank payment, sign up for a mortgage, credit card or loan, that is the beginning of the creation of a security. The bank that you're interacting with is the nominee for you. They put your energy into a security, and that security goes on the monopoly board at a zero cost. And then the future value of that security is very high. The difference between zero and a very high future value is original issue discount. The clearing banks are operating as nominees for you, the living man and woman. The clearing banks, when they take your deposits of your energy, they bundle them up, they sell your energy into what's called securitization vehicles or bonds, and the investment banks are trading these bonds. Now, the investment banks have to pay tax on the use of your energy. So what's going on here is that all of the investment banks that are predominantly operating in New York, in the USA, they are paying taxes for the use of your energy. You're the originator as a living man, woman. The energy is transferred onto the board by the birth certificate construct, which is a banker. You deposit your energy through signature onto this artificial monopoly board. The banks operate as nominees, which means trustee or fiduciary for you. Once you put the energy on the board, typically that energy is abandoned, which is why world debt keeps going up and up and up, because that's what currency is. It's human energy. The investment banks get to trade your energy, but they have to pay taxes to the United States Treasury for the use of your energy. Now, when you create an international grantor trust that sits on the monopoly board, separate from the person, the citizen, it is a new player piece that sits on the monopoly board. When you create that as the grantor, so the birth certificate construct is a grantor of an international grantor trust, and you appoint a professional trustee to manage that trust for you, and the living man, woman is the beneficiary. That trust, that 98 series grantor trust, operates as the holder in due course as soon as it files a 1099 OID to the United States Treasury. It can do that based on the securities which have been put onto the monopoly board from your age of majority. So all of those bank payments, all of the mortgages, all of the credit cards, all of the loans that you have originated through your signature, all of that credit is on the monopoly board. Our system tracks it from the moment it was created, from the moment of the deposit, onto the monopoly board, through the clearing bank, which is a nominee for you, the living man, woman, through to the investment banks that are holding on to your human energy, through to the tax payments that the investment banks are paying for the use of your energy on something called the 945 tax ledger. When you create a grant or trust to sit on the monopoly board, it becomes the holder in due course of the credit energy. It becomes the holder of due course of all of that energy you've put on the monopoly board since the age of majority. And when your professional licensed tax preparer, ERO, files 1099 OID, having identified the investment bank that is holding your energy and paying taxes on the use of your energy, having identified that, filing 1099 OID, now the taxes that the investment bank has paid the United States Treasury, remember the United States Treasury is the bankruptcy trustee for the entire monopoly board, they are collecting taxes from a debtor, which is the investment bank. And what they're going to do, because the International Grantor Trust is filed a 1099 OID, which is being done electronically using the license of the ERO, the tax preparer. Filing that 1099 OID redirects the taxes that the United States Treasury is collecting from the investment bank that is trading your human energy. And that tax is then redirected. The ledger is corrected. The grantor trust becomes the holder in due course, which pretty much means the creditor of that credit energy. And the taxes are redirected from the United States Treasury to the international grantor trust. This is how you get your recoupments. You're not recouping the actual bank payments or the mortgages themselves. You're recouping the taxes that the investment banks are paying for the use of your energy. And that is all calculated, tracked and traced by our system that we've built and professionally filed. You've got a professional trustee of the grantor trust. You've got a professional licensed tax preparer filing the tax returns. You've then got a banker that is going to collect the recoupment of the signature credit energy, which is taxes, from the United States Treasury under something called Trias 310, ACH Fedwire bank transfers from the United States Treasury to the grantor trust that is being put onto the Monopoly Board, that is now become the holder in due course. It is the true creditor. It is going to be recouping the taxes from the investment bank that is paid those taxes for on the use of your energy to the United States Treasury. And then from that trust, from that grantor trust that is made the tax filings, and then there are other filings once the IRS has confirmed that the credit energy is owed back to the grantor trust. Then the IRS is going to issue a wages and tax transcript. And in 2025, we had 600 million of confirmed wages and tax transcripts. That means that the IRS has ticked all of the boxes, has reviewed everything up to that point, has checked it all off as compliant. They've done that with an algorithm, which is called the algorithm 810. They use that. They can track credit energy from its origination, no matter how many years ago it was created. They've got a system that tracks it. Our system also tracks it from the origination date all the way through until the year that the 1099 OID is filed by the ERO, the licensed tax preparer, who's filing 1099 OID from the grantor trust, this new player piece on the Monopoly Board that is going to now receive back the taxes from the United States Treasury under Trias 310 through ACH and Fedwire. And then from that grantor trust, the trustee is going to transfer the recoupment of those taxes, which is equal to the face value of the bank payments, the face value of mortgages, the face value of credit cards and loans from the past. The trustee is going to transfer the recoup funds to the Asset Fortress Protocol, which is the members and envoy of Republic of Old Souls private treasury. The private treasury has its own bank account. It will spend and recoup in cycles, spend and recoup that credit energy. Every year it will recoup the previous year's spending. It's an international grantor trust. It has a separate bank account. It operates on the Monopoly Board as an international trust. It doesn't have to report its spending. It doesn't have to pay tax. It doesn't have to report tax. It is a exempt entity, really, from a tax and track and trace point of view, which is very good for avoiding digital ID. There's no reporting. It can spend everything that it's received on recoupments of taxes, and then it can recoup back the following year in cycles. And that is what I call the infinity loop. So that's the Clifford Protocol. There's a lot more steps to it, but basically that's the overview. Let's get into the questions. So the first question is, how does the historical pivot of 1933 define the nature of my signature as a credit instrument today? Well, as I mentioned on the overview at the beginning of this video, what you've got going on here is this bankrupt monopoly board. You've got House Joint Resolution 192 of 1933. James Traficant, the senator for Ohio, read out that the United States had now gone into Chapter 11 bankruptcy. Everything on the monopoly board is now bankrupt. All of the persons, everything, every company, every government, everything on that monopoly board is now bankrupt. The entire world system is bankrupt. It's a dollar-based system. It's all operating in Chapter 11 bankruptcy. But to finance the bankruptcy, they took the gold away and they replaced it with a mortgage over all the assets and a mortgage over the energy of the people. So the only way that the board can run is via the issuance of promises to pay in the future. The living men and women can't step on the monopoly board because they're real, they have substance. Everything on the monopoly board is artificial. It's like a hologram. So what is happening here is that when a signature, which is a commitment, it's a promise to pay in the future, is made by a living man or woman through the birth certificate construct, this banker, as confirmed in the Bills of Exchange Act of 1882, a bill of exchange or a promise to pay, a negotiable instrument, is issued onto the monopoly board. The bankers, the clearing banks, the banks that you interface with for your bank payments, for your mortgages, loans, credit cards, they are clearing banks. They don't actually have any money to lend. In fact, they're not even permitted to lend their own money in their charter. All they can do is take deposits of your energy. So when you make a signature, you are depositing energy, credit energy, onto the board. It's not real. It is energy. It's not real of substance. There is no money of substance on this board. It's all artificial. Every time you make a signature, you are effectively depositing credit energy onto the monopoly board. That credit energy gets traded by the investment banks. The clearing banks sell the credit energy in bundles to the investment banks. They use it, they hypothecate it, they make a lot more profit off the back of it. It's all digits. There's nothing real here. It's just ledgers. And because of the fact that when you put the energy onto the monopoly board, it goes onto the monopoly board with a zero value, but it has a very high future value. So the investment banks discount from the high future value to the current value, and they have to pay taxes on because they've got withheld federal income that they're paying taxes on, which is the difference between the future value of the instrument, the security, this promise to pay in the future, and the current value. You've put the energy on the board at zero, but it has a very, very high future value because the bankers are using your energy to profit from it. The next question, what happens to my signature once the bank captures it, and how does the investment banking arena obfuscate it? Well, the whole system is based on a usufruct system. So what's going on here is that your energy is transferred on the board through the signature to the clearing bank. The clearing bank sells your credit energy to the investment banks. And what's going on is there is a track and trace of that. So the United States Treasury has a system where they track your credit energy from the moment it was originated through the clearing bank into the investment bank. And your credit energy is put into investment bonds. The investment banks are trading these bonds. They all have what's called a CUSIP number or another reference number for the bond. So everything can be tracked and traced from the moment it was originated to the moment that the investment bank is paying the taxes on it under their what's called 945 tax module. So the investment banks, what they do is they create these omnibus accounts and they bundle all of these securities and the taxes that they're paying on them into these omnibus accounts. You won't know that those omnibus accounts actually are representative of the trading of your credit energy. But it is, and they don't make it obvious because clearly they don't want people to know that this is what they're doing. they pay taxes, the investment banks, on their 945 tax module. It's perfectly in accordance with the IRS publication 1212. The investment banks presume to be the holder in due course. They presume to be the creditor, when in fact they're not the creditor. They're just the presumed creditor of the energy. You are always the creditor. The living man, woman is always the creditor. But whilst the living man, woman has abandoned the credit energy, then the banks, the nominees, the clearing bank and the investment banks can claim or operate under the presumption that they are the creditors. But because they're using the energy, they are basically paying taxes to the United States Treasury for the use of your energy, and they obfuscate the energy through a presumption of being the creditor when they're not really the creditor. As soon as your grantor trust files a 1099 OID with a reference number, the CUSIP number, the payer, that's the investment bank, with a CUSIP number, and the recipient being the grantor trust that's filed the tax return 1099 OID. Now the investment bank is no longer the creditor. And this is what's going on. You've got CUSIP numbers, you've got LEI numbers, you've got EIN numbers, and then critically there is a 26-digit number that actually tracks the origination of the signature all the way through to the taxes that the investment bank is paying. The IRS has their own tracking reference number from your signature all the way through until the investment bank pays taxes on their 945 tax return. What is IRS algorithm 810, and why is it described as the hard gate for our recoupment claims? The IRS runs an algorithm. It's the 810 algorithm. It checks the origin of the signature credit. It checks the clearing bank. It checks the investment bank. It checks the securities that the credit energy's been traded in. It checks the taxes that the investment bank is paying. So basically, it's checking the whole lot. When a grantor trust that is now filing under the ERO, the tax preparer license through electronic filing software that the ERO has licensed to integrate to the IRS, they're filing that tax return 1099 OID from the International Grantor Trust. What happens is the IRS system, because it's all electronic, matches whether that 1099 OID is bona fide, whether it's compliant, whether it ticks all the boxes. If it ticks all the boxes, the IRS 810 algorithm is going to pass it, and that's after they passed it, it's going to issue, the IRS is going to issue a wages and tax transcript. If there's something wrong in the process of tracking that signature credit through to the investment bank, through to their 945 tax ledger, the IRS's 810 algorithm is going to block it. It's going to freeze that recoupment. You're not going to get a wages and tax transcript issued to the International Grantor Trust. It's going to be frozen, and that would then need to be looked into to unfreeze the 810 algorithm block. Why do ROS analysts perform such deep forensic analysis on individual securities? And can AI system automate this? Well, we've built an AI system that tracks the signature credit from the moment it was originated from the clearing bank all the way through to the bonds, that's the investment securities, with the CUSIP numbers to the investment banks themselves, from the investment banks to their tax modules 945. The algorithm that we've built tracks all of that from any bank anywhere in the world through to the 945 taxes that are being paid by the investment bank. Those taxes belong to the originators of the signatures. Can the IRS really triangulate a signature from I signed? That's the deposit of the credit energy 20 or 25 years ago for a mortgage to my current recoupment claim? Well, in fact, the IRS track everything as far back as you can go, as far back as electronic commerce was going on. They have something called the IRMF system. It tracks everything. It allocates every transaction with a 26-digit reference number. They can go all the way back to when electronic transactions started. They can track everything, and our algorithmic system will also do the same. So if you look back into your banking history, and if you remember which banks you had and roughly how much you put through those bank accounts, what the face value of your mortgages were in the past, credit cards, loans, if you can remember all of that and provide that information to us, we will be able to put it into our algorithm, and the IRMF IRS algorithm will be checking that our algorithm has got it right. And typically our algorithm is very, very accurate. So the answer to the question is yes, you can. How are the 98 series International Grantor Trust tax filings conducted? Well, first of all, you've got to create the grantor trust. So you become the grantor. There's a trust indenture. You appoint ecclesia trustees as the professional trustee. You appoint the ERO, WK, who's the licensed tax preparer. Now we're ready to, with the structure, the infrastructure, now we've got to get our algorithm to track and trace all of that signature credit energy. You give us a schedule of the banks that you deposited your signature energy with from the past, from the age of majority, bank accounts that made bank payments, mortgages, credit cards, loans. You write down a schedule of year by year, which banks was it, roughly how much did you spend, what was the face value of your mortgages, what was the face value of your credit cards and loans. When I say what did you spend, what bank payments did you make out of your bank account from the past? Estimate it and then add it all up, provide that information to us, and we will search out our algorithm will search out the signature credit energy that you say that you spent. If you put it out there or you put it onto the monopoly board, our system will find it, will match the signature energy deposits, because that's what they are, through to the investment banks, through the investment bonds. From the investment bonds, the investment banks are paying these taxes on their 945 tax modules. Our algorithm will track all that. We'll make sure that there's enough taxes on the 945 system, the IRS's 945 tax module, and that will finance your recoupment. So how are the 98 series International Grantor tax filings conducted? Through a very logical step-by-step process. You've then got a 1099 OID that's filed before the algorithm, the IRS's algorithm can check it all out. And then you get a wages and tax transcript in. Once you get a wages and tax transcript in to confirm the amount of the recoupment of abandoned taxes or abandoned credit, which is equal to the taxes that are coming back, then the 1041 is filed. You've got a bank account connected to that grant or trust that's going to receive the recoupments through ACH and FedWire. That's called IRS Trias 310. That's the process. And then from there, from the grantor trust that's filed the 1099 OID, a transfer of the credit of the recoupment to your Asset Fortress protocol, a separate international grantor trust that is going to operate your private treasury, spend and recoupment cycles. How did the IRS generate a wages and tax transcript for my trust when I didn't provide an SSN, that's a social security number, or a date of birth? Well, it knows the grantor. It knows, because you have to say who the grantor is. When I say who, the grantor is the birth certificate construct. The IRS will know that that birth certificate construct is the agent for that birth certificate construct is the living man woman. They've got records. They know everything. They don't need an SSN. They don't need a date of birth. They already know just the grantor's name and the name of the securities, the payer and the CUSIP number for the securities. Their system will find it. It's a very, very sophisticated system, this IRMF system. So the wages and tax transcript gets generated because basically the IRS map everything out with other references that they've got. They've got the payer, that's the investment bank. They've got the CUSIP number for the securities. They've got the name of the grantor for the International Grantor Trust, and they can track and trace everything from that. When the 98 series trust has filed the 1041 tax return following the receipt of a wages and tax transcript, how does the trust receive the recoup funds? Well, the trust, that's the International Grantor Trust, has got a professional trustee, Ecclesia Trustees. It has an Ecclesia Trustees has opened up a bank account for that trust, and it will receive the recoupment, the taxes from the IRS through ACH and Fedwire, that's bank transfers. ACH is under $1 million, Fedwire is over $1 million, and the IRS described this as the IRS Trias 310 process. And the receipt of the recoupment, which is a tax redirection, is for benefit of the account that is being set up for that grantor trust. And of course, the banks have signed off on the whole process A through Z, otherwise they wouldn't be involved. What are the specific filing steps followed by the electronic return originator, that's the ERO, to generate the wages and tax transcript? So the first step is the recognition, that's the search out of the signature through to the investment bank. All of that I've described on previous questions. The next is that the issue price of the signature credit energy is 0. There is a future value of the signature credit, and that is what is basically why the investment banks are paying taxes, because that signature credit future value is very high. Discount it to the current value, and that generates federal taxes. They are withholding them. They have to pay them to the United States Treasury. That's the taxes on the 945 tax module. The OID identification, well, that basically is a calculation that the investment banks do, and our algorithm does it as well, to make sure that there is enough taxes being paid. So the investment bank's already done their calculations. They pay on their 945 tax modules. Our algorithm makes sure that the sum of all of the recoupments for all of the grantor trusts from that particular tax module, that particular investment bank's tax module, we have to make sure that the trustee does and the ERO does, that the amount of taxes being recouped doesn't exceed the amount of taxes being paid by the investment bank. Nominee identification, well, that's all in the, basically that's the clearing bank. That's who you deposited your energy with, whether it was a signature on a mortgage to create a mortgage loan or credit card, or whether it was a bank payment or some other banking transaction. Redirection of the signature credit, which is the taxes that the investment bank has paid, is done because the 1099 OID redirects it. The 1099 OID can only be filed by the creditor. Once the 1099 OID has been filed by the 98 series grantor trust, this 98 series grantor trust becomes the creditor, becomes the holder in due course, is the entitlement holder of that recoupment of the taxes. And the investment bank and any other clearing bank connected to it, by the way, that includes mortgages, they are no longer the creditors. They are now the debtors because of the 1099 OID that's been filed. What are the precise references that justify the recoupment of signature credit to be lawful? Well, IRS publication 1212 describes the process, the Bills of Exchange Act 1882, Revenue Procedure 2002 to 26. That's the big one. That's where the trustee can command the IRS to transfer taxes that they've received from an investment bank from other tax modules of the investment bank onto the 945 tax module. It is the 945 tax module which has the priority. And Revenue Procedure 2002 to 26 is probably the most powerful aspect of this, to prove that it is absolutely lawful. The Uniform Commercial Code, Article 3, governs negotiable instruments. The signature, the promise to pay in the future, is a negotiable instrument. And then you've got the Trust Indenture Act of 1939, Section 316B, mandates that the absolute right of an individual holder to receive the benefit of the credit they originated shall not be impaired. Put all those together, you've now got a perfectly lawful process. In 2025, there was in excess of 600 million of confirmed wages and tax transcripts for hundreds of international grantor trusts. How reliable were these transcripts? Well, Andy Benson's recently done interviews with people who received these wages and tax transcripts. He did an interview with Ange, who's been heading up our projects team and worked with me and others to develop all of these systems out. She's been 100% involved all the way through, A through Z, on the project. She actually described the wages and tax transcripts that have been received, and Andy Benson showed them on the screen, showed a whole selection of them on the screen. Andy Benson's had his wife has had his, Angela's had hers, I had mine. Mine was 4.4 million. I've already recorded a video that describes that. So were they reliable? Yeah, because they'd been through the IRS's hard gate algorithm 810. They were confirmed. They were sabotaged by pirates who had their own agenda in 2025 that used to be members of our team, who went rogue for all sorts of reasons that I've documented on other videos and interviews. If I'm filing for 25 years of cumulative signature credit in, say, 2025 tax year, how does the IRS balance this against the bank's current year taxes? This is a very good question. So let's suppose that you've got $10 million of signature credit that you've deposited with the nominees, with the clearing banks over the last, say, 25 years. You want to recoup all of that $10 million in the year 2025. Well, all of that signature credit and taxes that you're owed back can be claimed in 1 year. And if the 1099 OID was filed in the 2025 year, that means that you can recoup that 10 million through to your grantor trust. By the way, 10 million is the maximum that you can recoup per grantor trust. You can recoup that in one tax year, 2025, even though the signature credit energy was deposited over the previous 25 years. You're still owed the taxes. Your grantor trust is the holder in due course. It is the creditor. It has a priority to recoup that 10 million in one tax year, which is the 2025 tax year. Next question. How do I reconcile signature deposits I made decades ago? And what if the original prospectus or SEC filing is gone? Well, no prospectuses ever disappear. They're electronically recorded, so you don't need to worry about that. And you don't need to find any SEC, any SEC prospectuses at all. What our system does is it reconciles from your disclosures. You've written down your estimates year by year. Which bank account did you have? What was the name of the bank? What was the rough amount that you used that account for, bank payments going out? What was the face value of mortgages, loans, and credit cards? Our system will be able to triangulate that and match it to the IRS's IRDM system. Remember, they've got a 26-digit event code that they're going to know to track it. You don't have to be precise on exactly how much you spent. That's the bank payments leaving your account in each of those previous years. You don't have to be precise on the face value of the mortgage, credit card, or loan. An estimate is good, but don't go over the top, because that's going to fail the algorithm. The 810 algorithm is going to fail. So be accurate as you can, or be cautiously accurate, if you know what I mean. Why must we use a 98 series international grantor trust instead of just filing from the personal social security number? This is critically important. If you file tax returns as a debtor, that is the birth certificate construct fires into the IRS tax returns, 1099 OID, 1040 tax returns. That entity that is filing for tax recoupment is actually a debtor. It doesn't have any entitlement to recoup abandoned credit. The taxes are only due back to creditors. So you have to establish the 98 grantor trust, because that can operate on the Monopoly Board separate from the birth certificate entity, the entity that has the social insurance number, as a creditor. The grantor trust is a creditor. The person, the citizen, the birth certificate construct is a debtor. Debtors filing for the recoupment of taxes can go to jail or be fined, and creditors that are filing through 98 grantor trust, being the creditor, being the holder in due course, as it says in IRS publication 1212, that is the lawful way of doing it. Does this recoupment process impact the solvency of the United States Treasury? Well, I wrote a whole research paper on this, which you can find at Ecclesia Law. The answer is no. Remember that the entire Monopoly Board is artificial. It's all ledgers. It's just a ledgering system. The redirection of taxes from the United States Treasury to the grantor trust, to your grantor trust, you may have more than one if you're doing more than 10 million of recoupment, is not going to bankrupt the Treasury. Remember, there's no money of substance. There's only ledgers. The United States Treasury, every government around the world can create unlimited amounts of currency ex nihilo, as described by the Bank of England, as described in the research papers that Professor Richard Werner issued out about 10, 15 years ago. The system isn't going to go bankrupt. It's an ex nihilo system, which means credit is transferred onto the board either through these deposits or through governments buying bonds from, selling a bond, the Treasury issuing a bond and the central bank buying a bond. That's ex nihilo credit creation. That's quantitative easing. 97% of the credit on the Monopoly Board, that's the currency, credit stroke currency on the Monopoly Board, is signature credit, is deposits made by living men and women through the birth certificate construct. The taxes that the IRS, United States Treasury collect, really make no difference to the financing of the United States budget. The United States budget is financed through ex nihilo credit creation, as every other government is as well. So it's not going to affect it. I hope you've enjoyed this video. Thanks for watching.